I get asked a lot what inning we're in terms of the AI era. I like to say we're still building the stadium. Right? We're all the money that's being made is being made on building out the infrastructure that's going to provide the services that we're all going to use. And so, we're just getting ready and just getting started.
Okay, so by way of introduction, my name is Mark Abode. I've been with Middlefield for the past few years. Prior to Middlefield, I spent my entire career in the software industry, so I have some perspective on tech. And let me turn to Paul and Shane for their introductions.
Well, I'm Paul Sagawa from SSR, and I've been working with Middlefield for nearly a decade, and spent a lot of time on Wall Street covering tech. So, good.
Shane Obata, I'm the lead portfolio manager on the Middlefield Innovation ETF.
Okay, so Paul, you've had a long history in the tech industry, right?
Yep.
And following it and seeing a lot of cycles, a lot of tech cycles like personal computing, cycles like the internet, cycles like mobile. These all have profound impacts on society at large. Now we're into a new cycle called AI. What's your perspective on how impactful that AI cycle will be on humanity and companies and people?
Yeah, if you think about the internet, pre-internet, communications was done in fundamentally different ways. And in the last 30 years, I think the driving technology change has been the growth to ubiquity of the internet in everybody's pocket, in everybody's home, in every desk, and every workplace. I think AI is going to be like that. It's going to be transformative, and the next 30 years is going to be what's driving change in the tech landscape. AI, though, I think is sometimes misunderstood. It is a software tool. It's a technique, and it's one that takes discrete computation, find an answer, and allows you to say, hey, what's the optimal solution to this set? Weighing all these different factors. It lets it be less deterministic and more kind of probabilistic in the way it operates. And that may seem simple, but it has profound impact on software. It makes software able to communicate naturally. It makes software able to do predictive analytics that are incredibly complex and done very, very, very quickly and efficiently. It lets it provide creation tools that let you make content of all kinds of different ilk easier and better, and more easily and better. And it also lets you automate tasks to be able to react to the environment and behave on your behalf in various ways. So you take all those things together, and I think slowly it's going to creep into every single aspect of every use of software in your life. It's also going to enable entirely new applications that you never even considered. I mean, already I think it's driving self-driving, it's robo-taxis, these sorts of things. So you're going to see it everywhere, and it's a big deal.
Okay, so Shane, let's turn to you. Let's talk about your fund, your tech fund. So this year to date, you're probably up, mid 20%, so pretty decent returns. Last year, over 40%, so excellent returns. So what are some of the key elements that drove those returns?
I think the first one is our AI framework, which is very simplistic, and I think that actually helps. And it's borrowing from past cycles, talking to Paul about different things. Right now, it starts with semiconductors and hardware. It starts with the picks and shovels. And next, we think it will move towards infrastructure and then eventually software. But for now, in a simplistic view, where are the profits going? They're going to the semiconductor companies. So Paul and I were talking about this. We're probably in stage 1.5. Infrastructure players are starting to make money, and there are only a few software companies that can really say that they're making money on AI right now. So that framework, I think, has continued to work. So we're sticking with that and being careful about making sure that this permeates society the way that we all hope it will. The other key differentiator, I think, this year has been the high quality focus of our fund, meaning larger cap, already profitable companies, well-established technological leadership in their respective areas. So I think that's been important because coming into this year, one of our highest conviction macro views was that interest rates, whether at 5 or 4%, would still be restrictive, and that environment would bode well for bigger companies versus smaller companies. And so that's played out nicely this year. And we do think there's going to be opportunities in smaller and mid-sized companies over time as AI continues to, new companies come across novel applications and whatnot. But even still, as a whole, that's been a good capital allocation decision. And I think that's been a key driver. And we're sticking with that view for now as well.
Okay, excellent.
I just want to say, I get asked a lot what inning we're in terms of the AI era. And I like to say we're still building the stadium, right? We're all the money that's being made is being made on building out the infrastructure that's going to provide the services that we're all going to use. And so, we're just getting ready and just getting started.
So we're actually not in the early innings. We haven't even started the game.
No.
In some ways, right? Because we're building on the infrastructure. But let's take that a little further to play that over the next few years. What do you envision is going to happen, not just with tech companies who, learn how to harness AI to be valuable to, companies and society, but also companies at large adopting AI and what the impact might be for them. What are your thoughts on the future?
Yeah, I mean, the companies that have the expertise are already using AI. Google and Meta, they've made groundbreaking changes to the way they target ads and sell ads. So advertising has been, sort of ground zero for all of this. And now those tools are being made available on a broad basis to anyone who wants to try to use them. I think, as we move forward, we're seeing tech companies software publishers, Adobe is a good example, using AI to enhance their applications that they sell to their customers. But a lot of software in this world is customized for specific companies, and those companies are going to need to step to the plate and use this incredibly powerful set of tools. I think consulting is going to be a real next step. You're going to see the IBMs and Accentures of the world, step up to it and help those retailers and those energy companies and those chains of hospitals or whatever start using AI in ways that make profound difference in their business.
Okay, that's great. Shane, back to you. Just following on conversation with Paul and how that impacts, your portfolio and your selections over time, longer term as you see AI play out in the world. What are your thoughts on how that affects your portfolio of stocks that you pick, et cetera?
Right. Well, Paul's basically talking about how naturally the companies that have been doing AI for the longest are going to use it first. But I think perhaps more impactful to people is sort of the real world applications, and we'll need to continue seeing them play out because there's a lot of investment to justify, right? And so starting to hear different companies, major companies, JP Morgan is one, Walmart is another one, that are actually using AI in their businesses. So just to step into the Walmart example a little bit, because it was important and I think it moved the market. They have an endless catalog of items, as you would imagine, and they use various LLMs, large language models, to make their catalog better. So they have 850 million data items in this catalog that they were working on. And they used AI to either create data or to make the data that existed better. And the whole purpose of this was so that clients of Walmart, such as ourselves or people we know, can find what they need faster. And also employees of Walmart could find things faster to then serve clients. And so the company has said that doing this work without the LLMs would have required 100 times the manpower. So these are real examples that are starting to show up that really give some credibility to the AI spending we're seeing.
Yeah. Okay. So, wrap it up. I mean, at the end of the day, the AI cycle, Paul, super important, as big as they come for tech cycles. It's going to not just impact, players in the semiconductor space, et cetera. It's going to impact all the tech players and all companies and humanity at large, right?
Yep.
But like you said, we're still building the stadium. We have to see how it plays out, but it's something we have to be very mindful of as we're designing portfolios to return value to our shareholders, to our investors.
Yeah. I would just have one final point. I think the AI ecosystem is pretty well known now, and so Paul and I have been talking about, as we do regularly, there's many other secular themes that are not going anywhere. And these are really important to identify, because when you can figure out things like streaming and online advertising and e-commerce, when you're finding winners, you're also finding companies that are at risk too. Paul, for example, was pretty early to call that Netflix had won the streaming game, which they most definitely have at this point. So it's important to have those overarching views, and I think Paul's experience really helps a lot there.
Okay, great. Thank you, gentlemen. Appreciate it.
Thanks.